when we think of pensions, sovereigns, the larger endowments, the very most kind of conservative asset managers, they're definitely leaning in a more aggressive way than they were, say, a year or two ago. And then on the financial institution side, the large banks and brokers are accelerating in a big way. And that's really exciting because it'll just grow the market.
This episode is brought to you by Propy, which is leading the charge in putting real estate on chain. Propy is a game changer. You can buy and sell real estate with cryptocurrencies using the Propy platform, which is powered by a blockchain, of course, and they have a native token called Pro. And I've been an investor in the Propy token since 2018. So Propy is a licensed Web3 pioneer operating since 2017. They have facilitated over $4 billion in transactions. They're putting titles and deeds on chain. They use Coinbase for their crypto escrow service. So this is a great platform. And once again, they are ahead of the curve when it comes to putting real estate on chain. And they just launched a great campaign where you can earn some of the Propy tokens. And it's simply by doing tasks such as sharing their vision video, signing up and inviting a friend, and much more. So if you'd like to learn more about Propy, visit the link in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Brian Foster, who's the Global Head of Wholesale at Coinbase. Brian, great to have you on.
Thanks a lot for having me, Tony.
Brian, I'm excited to speak with you. Coinbase, of course, is leading the charge on many fronts, and especially the institutional front. And I want to get great insights from you and all the great things you guys have been doing there. But let's start with your background. Tell us about where you grew up and how'd you get into the world of crypto?
Happy to. So I've been at Coinbase for around 6 years now, which in some ways feels like the blink of an eye, but in other ways is a long time in crypto. And at Coinbase, I'm responsible for a couple of our institutional businesses. One is what we call wholesale, where we power leading banks, brokers, fintechs, and payment firms by holding out our infrastructure to them. And we're in the process of rebranding that business to call it crypto as a service. And another is our government practice, where we work with leading, U.S. federal and state agencies, as well as other governments around the world. And the last is our ETF practice, where we safeguard something on the order of 100 billion or so in crypto assets in our custodian, and also help the ETF issuers trade those assets as well. So that's what I'm up to today at Coinbase. I've worn a lot of different hats at the firm over the years, and was one of the early members of our institutional team, really helping get this business off the ground. But before Coinbase, I had a number of different jobs in venture capital, investing in crypto and cybersecurity, as well as FX trading at an early stage startup, and also spent some time at another crypto company just before Coinbase, which was acquired by PayPal. But on the personal side, I'm an East Coaster. I grew up in the Boston suburbs and moved around a lot after that.
Oh, very nice. You mentioned the company that was acquired by PayPal. That was Curve, I believe, right?
That's right. Yeah, we were an early stage MPC-based crypto security company. So holding out a sort of wallet infrastructure solution to the early institutions that were starting to come into the market.
And you mentioned you have experience in the FX markets. What similarities do you see, given that these are digital currencies or digital assets? What similarities do you see between those markets?
There's a ton of them. And it's funny, now in crypto, this is a much bigger market than it used to be. And it's always interesting to hear people's backgrounds. There's a lot of folks in the industry who cut their teeth in FX. And so I think it's a nice orientation for a lot of the things that we're now working on in crypto. The most obvious similarity is you need to understand, 24/7 markets, of course, right? And so that's distinct from some other asset classes that are not trading around the clock. But in addition to that, if you're in the FX business, you have to start to learn about currencies and how money works, and hard assets and monetary policy and all of these things that have great applicability to crypto, albeit sometimes in slightly different ways. So the combination of that FX orientation and also the security stuff gave me sort of all of the raw parts to start to think about building a career in crypto.
Oh, for sure. You mentioned that the 24/7 aspect of this, and correct me if I'm wrong, I don't think there's any market that trades like this, right? 24/7. We're seeing now the stock exchanges and these folks are trying to get there. And do you foresee, oh, well, first question, how is Coinbase prepared to handle this? I mean, I'm assuming you got have to have teams at different parts of the world, and maybe you need to use AI in some ways to help manage some of these things.
So it's funny that in many ways, I think crypto has been a little bit of a forcing function for the more traditional brokers and banks who are used to sort of, normal trading windows to actually start to contemplate how do they extend out to be able to support 24/7. So the growth of this market, along with FX, I think has pulled folks towards 24/7. For Coinbase, we sort of were born here, if you will,
Sure.
right? And so it's a kind of native thing for us, and we're really trying to to pull traditional finance in this direction as well.
Mm. Brian, I'm always fascinated by how folks have what their first encounter was with Bitcoin and what was their aha moment. So, what was yours? How did you discover Bitcoin or blockchain, and how did that, what was the eureka moment for you?
Sure. It's a funny one, right? It's a little bit of luck and a little bit of focusing on the right kind of geeky things at the right time. So I was working with the founder of the first startup I worked on in this FX trading business, who was a really early Bitcoin investor, and I would kind of hustle for him and do a lot of extra projects on the side, and he would pay me in Bitcoin. And so eventually I was like, I got to learn more about this Bitcoin thing. And sort of went down the rabbit hole and ended up turning it into my career. So that's my origin story. And of course, because I had also been a founder before that and dealt with payment processing firsthand, and so again had this kind of orientation where I felt the pain, and so had a sort of gravitational pull towards things that felt like they could solve problems in the world of payments and money movement. What about you? I'm curious, Tony, to hear your story.
Oh, so mine is a buddy of mine. Well, I should say, every Friday or Saturday night, we would get together at Buffalo Wild Wings. We have wings and beers, and it's usually about like four to five of us. And one of my friends, Sebastian, he back in late 2016 brought it up to us, the group. We're like, hey, check this thing out, Bitcoin, Ethereum. And of course, we're like, what the hell is this? This sounds like a scam. But then he started making money, and that's when I really started paying attention because he was investing in it and taking profits. And I was looking at it from afar off, and once I saw the value go up, that drew me in. I'm like, wait, how is this thing moving like this? And I went down the rabbit hole. I read the Bitcoin white paper. I started learning about blockchain technology, and I've always had an affinity to technology. So right away, I was like, wait a minute. I see what's happening here. This is like the next layer on top of the internet to move value, and the rest is history.
I love that story, and it's an honest one that I think resonates. I've joked with a number of my friends that like by far the best forcing function gets you focus on something is like the fear that your friends might be making money and you're not.
Yeah,
You're like, oh shoot, I better look at that thing.
exactly. It's so funny. At first, he didn't have my attention, but when he started making money, then he had my attention.
Yeah, that's great.
If you don't mind me asking you, Brian, the Bitcoin you were earning as your salary, right? Did you at the time have an idea of what this was and you kept some of it, or you were like, I'm gonna cash it out because I need the work, to pay my bills?
Yeah, I did end up keeping it. I think I had a view that there was going to be a very long-term journey here. And because I was in the world of startups and early stage venture capital, I kind of approached it with a very long-term sort of startup like mindset. So now I did make a mistake of selling a small piece of it once, and I'll spare you the details of that story. But that's a lesson I think most Bitcoin people learn the hard way. You sell a little bit of it to buy something that you probably don't need, and hopefully you still have that thing, and you probably overpaid for it like I did by many multiples.
It's funny. I'm thankful for Michael Arrington because I interviewed him a couple times, founder of TechCrunch, and he has his own crypto fund, of course. But when I first interviewed him, he said, just buy some Bitcoin and put it away. Don't sell it. And that resonated with me because I had the idea I'm just going to play the cycles and sell this. And don't get me wrong, I've sold some altcoins, I've sold a little bit of Bitcoin, But the majority, my strategy now is long term, and some of it I think is going to go to my daughter. I'm not going to sell it ever.
Yeah, that's great. It's also just better for mental health and sleeping. I think trading a market this volatile is super challenging. There's some people who can do it, but if you can't, I think devote, your entire kind of waking daytime to it, it's better to have a really long-term orientation as an investor.
Oh, absolutely. All right, let's talk about things that are happening with Coinbase and institutions. Earlier you mentioned kind of the trifecta, the ETFs, the governments, and of course the financial institutions. Obviously, there's a big partnership between Coinbase and Blackrock. Since, let's say, the government change in approach to crypto and all the things that have been happening, what type of activity and demand are you guys seeing from institutions?
Sure. I think a really important operating principle for our company is we want to have really a steady hand, rain or shine, throughout any market cycle, throughout any political regime. And I think our focus that singularly, revolves around crypto is a little bit of a competitive advantage in a way where we actually can't afford to take our eye off the ball or divert if there's a political regime in place that might be a little bit more challenging. So in some ways, on the business side for Coinbase, it's kind of business as usual, but the aperture for the things that we're probably able to do has widened a little bit, which is always positive under a new regime. But we're putting the same energy, into our product roadmap and supporting our clients today that we were, 2 years ago. It's just foot on the gas all the time. I would say on the demand side with the clients, certainly having some more regulatory clarity and the sense that you're not going to be punished for being a participant in this asset class has been a positive thing. So there is some incremental cohort of sort of client demand that maybe was on the fence during the prior administration and is now feeling more ready to go. So we have seen steady demand. You've seen obviously that reflected in sort of elevated asset prices, particularly with the larger and more conservative financial institutions and asset managers. So, when we think of pensions, sovereigns, the larger endowments, the very most kind of conservative asset managers, they're definitely leaning in a more aggressive way than they were, say, a year or two ago. And then on the financial institution side, the large banks and brokers are accelerating in a big way, and that's really exciting because it'll just grow the market. And I think provide investors with a lot more ways to access crypto. And for us, it's exciting for what we're calling our crypto as a service business now, which we used to call wholesale, because that's a picks and shovels business that will power all of those financial institutions.
So speaking of the picks and shovels and powering those institutions, let's say the banks, which have now been given the green light. I think just yesterday, the Fed released an announcement saying we're removing certain restrictions. So let's say let me not name any banks because I don't want to, have any complications. I'm one of the largest banks in the United States. I want to now start offering crypto trading and custody services. Can I plug into Coinbase's infrastructure of trading, spot trading, futures or whatever it may be, and custody? And then on the front end, I'm operating as usual, pitching it to my respective clients.
That's exactly right. I couldn't actually describe it better myself. So that's a great summary. And I think one thing worth calling out is that this isn't really a new thing for us. We actually power roughly 200 leading banks, brokers, fintechs, and payment firms already through this infrastructure platform. It's a business we probably need to be making more noise about publicly, but we've been at it for a number of years. What's changed now is that we're just seeing the very largest banks, including in the U.S. market, start to step in. Whereas before it was more, ex-US. We've had a lot of activation in Brazil and parts of Asia. Now the U.S. is here as well. But yeah, from a product standpoint and what it looks like in terms of the kind of client solutions, your description was spot on. We're basically holding out trading, custody, trade finance, staking, trading for spot and derivatives, by the way, I should add, stablecoin solutions, tokenization solutions, and everything that we've built for our first party institutional business. We're just making that into a platform and holding it out so that these banks and brokers can build to it and piggyback on all of the hard work we've done at this infrastructure layer, which is quite challenging because, as you know, Tony, crypto runs on an entirely different technology stack, and so these are things that you have to build from the ground up. There's not a ton of reusable parts if you're used to running an equities or a fixed income business. So we're really excited about that, and we've had the benefit of a big running start here and a huge security budget and the technical know-how that we can now sort of hold out in a very cost-effective and efficient way to the rest of the market.
Yeah, that was going to be my next question. Did you have to make acquisitions, or are you building this from the ground up? Because, to your point, this is all new. So, is it a combination of APIs, a combination of blockchain technology? Talk to us about the tech stack behind that.
Sure. Well, it is a combination of buy and build. We've made a few really critical acquisitions over the years. You might remember Tagomi, which we bought, I think, just before we went public, which ultimately we grew into Coinbase Prime, and is what we felt at the time was the best in class, algo brokerage for crypto. Now that's the sort of heart of the Coinbase Prime solution. We also bought a staking company called Bison Trails that became core to our staking infrastructure. And then coupled with those acquisitions, we've built obviously a lot of this internally as well. But you're right in that everything from the perspective of these banks and financial institutions who are building to us, it looks like APIs, right? So there's an endpoint for each of these things that you can build to. And we supplement that integration with great kind of technical help through our solutions architecture team and help kind of handhold these firms to wire up in a quick and efficient way. Now, from a contractual perspective, this looks a lot like sub-custody, right? Which is a primitive that I think a lot of banks are used to, and we've wanted to make this analogous to things that financial institutions understand. So we have a bilateral relationship with these partners in pretty much every case contractually, and they're piping into our APIs from a technical perspective. And then we manage all of this stuff through typically a series of omnibus accounts on our side. Well, the financial institution gets to own their client and own their brand and face their clients just like they normally would on the other side.
And with the custody side of the business, and I'm not too educated on this, but I'm curious how that's set up as much as you can tell us, because custody is such a huge deal, and especially in a post FTX world, right? With what we saw there and commingling of funds and all that nonsense that was taking place. How is Coinbase handling custody, and are you diversifying in a sense of using other, like certain banks who are custodians and putting some funds there and just splitting it up, so to speak?
That's a great question. So we could talk for hours and really geek out. I'm going to give you the summary to spare you and your listeners. But just so sort of setting the stage a little bit, Coinbase today as a firm safeguards something on the order of 12% of the entire crypto market. And that's both a privilege and a huge responsibility that we do not take lightly. The institutional business within that accounts for more than half of that asset base now and has grown for us quite quickly, and it has been accelerated by the success of these large ETFs we work with and some of the other really large clients. But when I describe what custody is, the simplest way to think about it is it's really a marriage of two things. First, a technical and operational solution that revolves around private key safekeeping, which is a really interesting and novel thing to the world of crypto that does not exist in the traditional custodial markets. The second thing it is really a regulatory and legal wrapper that affords the clients additional protection and speaks to how the assets should be treated and held in ways that are very similar to what you would see in a traditional securities custodian or something you're used to seeing from Wall Street. So we've taken that structure that works very well and married it with the novel sort of technical requirements of crypto to make what we think is the leading custodial solution in the market. Now, the last thing I'll add is there's a ton of extra bells and whistles and complexity that go along with that system related to multi-user controls and operational processes and extra layers of security, so that you have many layers of controls between humans interacting with an application and the actual underlying, decryption and reconstruction of a private key, which is the most sensitive part of the process. So I'll keep it about there from a sort of depth perspective. So I don't bore you and your listeners, but that's a really quick synopsis.
And talk to us a bit about the impact of these institutions coming into the market, like banks and some of the, I mean, we're seeing stock exchanges getting involved as well. Do you believe they bring more stability to the market, more liquidity, and I don't know, just helping the market to mature, if that's the right word?
They definitely do. I think we're in this unique position as a firm, as Coinbase, where we have this burgeoning first-party business that everyone knows well, that's branded, but then also this crypto as a service infrastructure business, where away from that branded business, we're going out and powering all of these new entrants who are coming in. And really, the strategic reason for why we think this crypto as a service part is so important is exactly for reasons that you just described. We actually want to see the market grow and see a lot of these reputable firms who have huge distribution come in and grow the market. And so that's very much happening right now. We've seen a lot of early movers with the fintechs and neobanks, but now some of the largest and longest standing traditional brokerages and banks entering. They're absolutely going to bring credibility to the market in the same way that these large ETF issuers did. So our view is, more access for a bigger market is better, and we want to be there to help power everybody from an infrastructure perspective and grow a safe and large ecosystem.
Yeah, that definitely makes sense, and it's good. It's good to see these big names coming in, and I believe it was yesterday, it was announced that Coinbase and PayPal are expanding their partnership to integrate the PYUSD stablecoin even further. Tell us a bit about that.
Sure. So this is a perfect example of one of these large, crypto as a service partners. We're really proud to partner with PayPal. They've obviously been a pioneer in the world of fintech and payments, and are a lot older than we are as a firm. So obviously there's a lot of interesting things happening there with respect to powering trading and asset safekeeping. But this specific announcement centered around stablecoins. And this again speaks to our desire to be really a platform that supports a broad market and not just our first party products, right? I think everybody knows that we're very committed to USDC and excited about continuing to grow that asset. But ultimately, we want to be a multi-asset platform and a place that supports the partners who have assets that they're excited about as well. And so in PYUSD and in PayPal, we see a leading partner that can help grow the market, and we're very happy to help support them with access and distribution in a way that's going to benefit both users and merchants who are accepting PYUSD as a means of payment.
Brian, I don't know what you think about this, but even though you have the likes of PayPal partnering with you, PayPal itself offers crypto trading, right? People can spot trade. So in a sense, they compete with your retail business. And likewise, some of the institutions you're going to work with, they may offer their own custody service or whatever it may be. How do you guys view those relationships where these companies already have some sort of crypto service? And, could they be trying to learn what you're doing and then go and build their own thing?
Yeah, it's a great question. I think that, again, it comes back to this platform strategy we have. So we welcome more sort of firms with huge distribution and great brands growing the market. We think that's a positive. And then on the back end, they're going to leverage our capabilities, whether all of them or some of them, to power this stuff from the infrastructure perspective. And, there is a validity to your question of, well, hey, can't some of these really big firms just build this stuff themselves or maybe switch out at some point? And I think that what's interesting right now about where we are in the evolution of the market and the evolution of our infrastructure is that the infrastructure has become so mature and price competitive that when you do the calculus and you think about building these things in-house in a very expensive and specialized way, and then you compare it with the opportunity to rent the leading infrastructure for a handful of basis points and get to market faster, have a lower cost structure, be instantly profitable, it becomes kind of a no-brainer, right? For the same reason that AWS and GCP are these monster businesses in the world of compute and storage, we really are trying to do the same thing with crypto. And I think more and more firms are going to conclude when they look at the infrastructure that it makes sense to partner at that piece of the stack for speed to market, cost, and sort of product depth reasons, and then to do what they're great at with the last mile to their clients and holding out a really great and usable product.
Yeah, great point. To try to go build all of these things that Coinbase has spent years doing with building from the ground up and acquisitions is going to be you need a lot of capital. You need the expertise, so you got to find the talent as well. So it's definitely going to be a lot of resources needed.
It's right. And there's one other X factor, which I think is like underappreciated by people looking at the industry from 10,000 feet, which is just that it's really, really hard to hire technical crypto talent. And the best engineers and product people in our market generally want to sort of concentrate, I think, at places where there's serious crypto depth and they want exposure financially to the industry. So that's been an interesting dynamic we've seen as well. Occasionally over the last 5-10 years, as some of these firms have wanted to build things, they've said like, man, it's too hard to hire talent. I'm going to instead partner with the firms that have a sort of muscle around how to do that and have already coalesced a lot of talent in one place.
Talk to us about tokenization and building that's happening on Base, which is Coinbase's Ethereum layer 2. There's been a lot of success there on the retail side. Take us behind the curtain and what's happening on the institutional side.
We're really excited about Base. I think you've probably seen the growth numbers, and it continues to kind of rip up and to the right. But I think my favorite thing about Base is that it's really a low-level infrastructure play that's applicable to so many different use cases. So there's kind of something here for everyone, right? We saw the earliest adopters, of course, coming from DeFi and a ton of engagement from various DEXs and other sort of more protocol level focused builders. But Base is also hugely applicable to the institutional market. And you kind of nailed it with this comment on tokenization. What we're now seeing is that in the world of asset issuance, when folks are coming out and saying, I have a new tokenized money market fund or some sort of tokenized security or whatever it may be. And by the way, we have a view that ultimately everything will be tokenized. Well, you need a place for that token to live and operate, not just at the wallet level, but also on chain at the transactional level. And so it's a natural part of our strategy to want to have, an open architecture and super performant place that can support all of those transactions for all of the tokenized assets as they come into the market. So I think we're at the very beginning of this, but I'm so excited about it. And we're seeing this really interesting collision of the sort of bottom-up DeFi builders sort of flocking to Base, but also some of the very largest financial institutions as they issue assets building first on Base. And I love that that's all happening in the same place, and I'm really excited about what's next.
Question for you on institutions using Base, because I've seen with other blockchains, many of them are creating private ledgers or private subnets because institutions don't want certain information out there, which is common sense, right? There's some proprietary information, customer data, and so forth. How are you able to facilitate that, the privacy aspect?
This is a great question, and it gets at the heart of, I think, an issue that a lot of the earlier movers in traditional finance have kind of been grappling with, where if you rewind the tape kind of 5 years ago when people just started thinking about tokenization in a serious way, there was an initial impulse of activity around permissioned chains, and partly that was due to sort of some regulatory lack of clarity, but also partly it just felt, I think, natural for banks and financial institutions who are used to operating in closed environments. Yeah. As you play the tape forward and look to today, well, public chains have clearly reached kind of escape velocity, and there's huge network effects here that are undeniable. Mm-hmm. So as a matter of strategy, it's really hard at this point to justify building in a closed environment as your sort of only attack vector, because you're just sort of foregoing all of the great distribution and momentum that's been built up on these public chains. So I think the markets now, by and large, recognize that. The firms that have started in a sort of private permission environment are figuring out how to migrate over and embrace public blockchains in the same way that Coinbase has. But to answer your question really directly on like how do you make it work if you require some of those things that are not sort of maybe possible on an open blockchain, we see institutions being thoughtful around this by just disaggregating what's happening at the blockchain level versus what can happen at the application level, right? So that's one potential solution to this problem, is that you could address some of those identification and permissioning things sort of one layer up the stack, if you will. I will still say, we're going to obviously live in a multi-chain world, and while we're really bullish as a firm on sort of open public chains, including Base, I do think there's going to be a place for some of these permissioned chains. I just expect that they'll be smaller in the long run because, as we've seen with the internet, open protocols generally win once they hit this kind of critical mass and you have network effects.
And also, can it be like some sort of pseudo zero knowledge ZK integrated on the public chains, right? Where certain information is blocked, right? And it's encrypted, but generally it's open. Could we see something like that?
Yeah, that's yet another approach, and we have seen a couple of chains, experiment with that type of model. So, whether you're trying to take that sort of extra sauce and make it live at the blockchain level, or one layer above that at the application level, people are trying to figure out how do I accommodate these things and pull them into my design, so I can make the biggest financial institutions happy. So it's really early still. We haven't seen a ton of those models really reach any kind of scale yet, but there are a few different approaches here.
In scaling your business, I mean, because you guys are doing all these great things, you're looking to facilitate services to many different institutions. Are you running into any scaling issues, whether it be hiring talent, expanding globally because you're trying to facilitate services for all these different institutions globally? I guess my question is Coinbase at the place to do this, or do you need to hire 500 more people and open a new office in some other area? You know what I mean?
It's a great question. And honestly, it's probably the biggest challenge we deal with as a firm, which is a privileged challenge, I'll add. I've worked on a bunch of different businesses over my career, and this is a rare one in that the demand side actually has never really been our biggest challenge. It's more about how do you create the right organizational structure, sort of hiring cadence and focus to like meet the market and catch up to it, right? Which is an unusual place to be in operating a business. But yeah, it's especially pronounced in crypto. This market moves so quickly, and I think that all of us at Coinbase feel like we're often fighting multi-front warfare, and it's very hard to do that as a large company. So we have to be ruthless about prioritization and picking not just what we're going to focus on, but also what we're not going to do. And sometimes those are very hard conversations, but I think they're some of the most important ones we have. And we don't always get it right. I think we have we're pretty good at getting it right. But what I think we're great at is changing on a dime when we see the conditions change or when we are wrong, and correcting mistakes. And so that's a muscle we've built very well as a firm. From a personnel and headcount perspective, we say we're always hiring. We're in a growth market, but I think we've become pretty discerning as a company, and realizing that there's usually a better answer than always hire 10 more people to solve a problem. Sure. And so we've been really laser focused on efficiency, and I'm really happy with the team we have right now, and not super excited about the potential to double or triple the headcount of the company. Like, if we have to do that to meet demand at some point, that's great. But I think we want to stay lean where possible, and sort of follow where the market is rather than being too aggressive.
Yeah. Great points. And I only asked that question because I've been a user of Coinbase since like 2016, 2017-ish. So I've seen the growth, along with the market, and you guys are doing so many great things. And I'm like, hey, I remember this small exchange, and now, you have all these different things going on. And on that note, the other day I read this was reported by the Wall Street Journal, so I don't know if there's validity to it, but that Coinbase and other crypto firms were looking to get bank charters and licenses. Is there like a banking aspect to the business that you guys are looking to explore?
So I'm not going to be able to comment on a rumor. We're a public company,
Okay.
but I can tell you in broad brushstrokes that Coinbase is in a constant state of reevaluation of, all of our regulatory and licensing models. And as we build new businesses over the years, we've at moments needed to pursue additional licenses. But maybe it's worth just touching for a minute on like how we think about that and why it's important.
Sure.
I think our approach has been really to try to lean in actually to the most stringent regulators, even when it's hard. And this is something that is often like onerous and costly upfront, but pays dividends with our most conservative and largest clients. And so, we're super proud to be, regulated in New York under the NYDFS for our custodian, to engage with, the CFTC on our regulated futures business. And of course, other, similarly sort of strict and reputable regulators around the world. I think leaning into that regulatory strategy in a very sort of grown up and conservative way has actually been an edge for our business, and we want to keep doing that.
Hmm. And on a note, anything on your roadmap that you want to highlight? I know you touched on a lot, but maybe there's certain things you can't mention, but anything that you can.
I can't speak too much to the forward-looking roadmap, but I'm happy to highlight a few things we're excited about that are publicly visible right now.
Sure.
So, this year we're spending a ton of time on the crypto as a service business, which I mentioned initially. So that's meeting the demand for infrastructure from all of these brokers and fintechs and banks who are coming into the market. Another really interesting area that's been, well documented in public by the media is just the rise of stable coins and payments in crypto. So there's a few things we're doing there that we're very excited about. One is, the unglamorous but important work of integrating with ERP systems to be able to, again, kind of meet the clients where they are when we think about large enterprises. If we're going to have a new payment rail that's stablecoin based, that's all well and good, but it's got to kind of fit into their existing flows. And we don't want to make these large clients do extra work. So we're spending a lot of time just reducing friction around the access points for corporate payments. And then the other big piece of that is, of course, not just the blockchain throughput problem, which we've held out base as our solution to, but also the on and off ramps. And so again, an unglamorous but very important part of this strategy is being able to provide, access to more on and off ramps and more geos, so that we really can become a global, payments marketplace and not just a regional one, which is of course less interesting. The last thing I'll mention, which we've been very public about, is just our efforts on, international perps. And so we're putting a lot of firepower right now behind that growth effort, and are excited to really play in this super large and growing derivatives market, not just outside the U.S., but also domestically.
Oh, for sure. I mean, all exciting updates, and we'll have to have you back on as some of those come to fruition. I want to get your thoughts on the general crypto market and what's been going on. Obviously, Blackrock, one of your partners, has the best performing big ETF ever, the Bitcoin ETF IBIT, of course. And we have the Ethereum ETF, and there's other altcoin ETFs in play. What are your thoughts on how these crypto ETFs have grown and the demand for more?
It's been really extraordinary. One of the most kind of energizing projects I've gotten to work on in my career, figuring out how to stand up the ETF business here. And I think the numbers just speak for themselves. I mean, these ETFs, led, of course, in scale by BlackRock and IBIT, have broken pretty much every record in terms of the speed and the size of asset gathering, and that just speaks to the demand picture that you and I discussed earlier in this conversation. If you can make an asset that there's demand like this for really easy for people to access, it's going to be a winning formula. And these large ETF issuers are really, really good at doing that. So we were excited to sort of marry, this best in class combination of our infrastructure and these large asset managers, client distribution, and really put forth a product that clearly here was the winning formula. But I'm excited about what's next. We've seen many dozens of new filings this year. Yes. So this notion of kind of single asset beta exposure, like that's just step one, and we're super excited about the success we've had there. But you can now clearly see those filings and infer that we're headed to a place of more assets, multi-asset model portfolios, staking. And so just the aperture for product here is getting a lot wider and more interesting. And we expect this to be a business that's going to continue to grow for us. So I'm really excited about it.
Yeah, it's exciting. And most likely, well, we'll have to wait and see. New SEC chair Paul Atkins just got into office, sworn in last week. So I think everybody's waiting to see his next moves, and maybe could be approval of these altcoin ETFs. And that would be really big for the market. I have this thesis that, the majority of people right now don't really invest in individual stocks, but they invest in the indexes, the S&P 500. Could there be a top 10 on the crypto market that they invest in, Bitcoin and some of the top altcoins? And that might be the ETF, so to speak, that really do well in the long term versus individuals. But we'll see.
I think so. You may have noticed through our first party business, we have a Coin 50 product, which is really oriented more towards retail that does exactly that, of the top 50 side. But through our infrastructure business that services other ETFs, we expect to see other products like that as well, and are really excited to support them. I think depending on the client type you're going after, that the sort of shape and basket of what's included in that kind of a product needs to look a little bit different, right? The most conservative investors might not want 50, they might want 5. But yet at the other end, there's certainly some maybe retail or more trading oriented investors who might want 100 or 500, right? And so I think you'll see a lot of creativity from these issuers as they combine assets in different ways to try to compete with each other.
And then, with regards to crypto legislation, we got a couple bills in play. President Trump told Congress, get those bills to my desk before the August recess. Are you you and the folks at Coinbase and optimistic that Congress can get this done this year?
I think we are. Yeah, you'll have to have our policy team on who can speak to this in much more depth than I can, and are very much on the front lines of the fight to get this right. But I think that as a firm, the way we think about this and the way that I try to contribute to the policy discussion from this institutional vantage point is we're really focused on driving legislation over the line that's durable and that's going to provide long-term clarity for the rules of the road for how this industry should operate. So obviously for the stablecoin bill, if we have the opportunity to define rules around issuance and reserves and who can do this and where, I think it's going to be a boon for market growth, and you're going to see the already rapidly growing market cap of stablecoins likely go much higher. So that's one area we're very excited about. And then on the market structure side, I think having sort of final clarity on just the characterization of how we sort of bucket these different types of assets, whether they're digital commodities, currencies, securities, and what those things mean, will provide another set of investors with sort of more confidence to enter the market. So that would just again unlock, I think, some incremental demand, and of course help the firms like Coinbase who are building in the industry to more clearly kind of prioritize around what we're going to build next and how we're going to describe our products to the world.
And then the other thing that's in play is also a Bitcoin reserve and a digital stockpile. And, one of the things you mentioned earlier is Coinbase is working with governments to facilitate different types of crypto services. I believe the U.S. Marshals, if I'm not mistaken, uses Coinbase custody. Talk to us I'll have to edit this out. Talk to us about that, and how is Coinbase ready to facilitate something like that? If the U.S. government comes knocking, we want to custody with you for the Bitcoin reserve.
Sure. We're really proud of the government business we've built here. And Coinbase has a long-standing history in working with law enforcement initially through our global investigations team, led by John Kathanik, who I think outside of Brian is actually our most tenured employee. So congrats, John, on 10 years. In parallel to that, as governments have started doing much more with crypto, in addition to law enforcement, we've obviously felt the need to stand up a commercial practice that focuses on supporting those governments with even more activities. So we're very proud to win the Marshals mandate, which took a lot of work. I can't speak to the SBR and things that are currently confidential, but I can say with a broad brushstroke that our goal when we engage government is really to try to show up as a tactical partner and assist in the areas where we think we have the track record and the credibility to assist. And that means custody, trade execution, ops, project management. We want to be able to hold out our platform and ensure that if a large government is going to do something in this asset class, that they get it right and that they do it safely. So that's the playbook that we hold out, whether that's the U.S. government or one of our international partners.
It's exciting, man. I'm hoping all those things can get done this year, and I can't wait to see if a Bitcoin reserve is passed into law and they get this going and all that, and they find a revenue neutral way of doing it. What type of FOMO is going to kick off around the globe? The United States is doing this, and we've seen a lot of countries follow the United States lead. It's going to be exciting.
I agree. I think for those of us who've been in the industry a while, it's important periodically to step back and reflect. Just in my time at Coinbase, we've gone from dealing with like lemonade stands to the federal government and Blackrock, and that's been astounding, yeah. and I think not something that certainly I've seen in other asset classes. So really excited that this is where we are on the journey, and look forward to engaging more government agencies on this kind of work.
Brian, great stuff. Got some wrap-up questions here for you.
Sure.
First, if you could create your own metaverse, what would the theme be?
My own metaverse. Oh man. One thing my colleagues may not know about me, because I'm such like a crypto nerd and focused on this all the time, but I also have like an art flair, and I grew up as a classical violinist, and I love the performing arts as well as painting. So I would love in another life to have a sort of creative arts oriented metaverse.
And rapid fire questions. Favorite food?
Oh God. I've got a lot of Italian on my mom's side, so food and cooking is like sacred in our family.
Sure.
I'm a live to eat, like not a eat to live person. Right now, I've been on a bit of a sushi bender, so I'm constantly looking for the best omakase in New York. So if you got any recs, send them my way. And I'm happy to share notes with you as well if you're a fan, Tony.
Oh, for sure. Favorite musician or band?
Favorite musician or band? I'm going to cheat and pick two. One from kind of classical roots, it would be Felix Mendelssohn. And favorite band, it's like kind of too hard, but I grew up listening to a lot of Radiohead, so that's an easy answer for me to just gravitate to.
Nice. Favorite movie?
Favorite movie? Dead Poets Society. I'm a huge Robin Williams fan, and that one it gets me like emotional and at the same time, and it's like a feel good from childhood.
Yeah, I'm a fan of Robin Williams as well. Favorite book?
Favorite book? It's another hard one. I was an English lit major, and so it's like I can't. I'm gonna cheat and actually go out of English lit and go to the classics and probably say Marcus Aurelius Meditations.
Believe it or not, I have a copy sitting right behind here, and that is my favorite.
I thought that you might say that. Yeah, I think a lot of people like that one.
Yeah, it's but based on our upbringings and experiences and so forth, certain books are impactful, and things like that. That was impactful in helping me grow as a person and understanding life better. It's just great.
It's a good one to go back to every few years.
For sure. And when you're not working at Coinbase, what are you doing for fun?
A bunch of things. Definitely kind of working on the art stuff on the side. So spending a lot of time in galleries and looking at painting. I've also through work developed a little bit of a golf addiction. Now that we're working with like real financial institutions, I had to figure out how to hit a golf ball, but no one told me it's addicting. So here we are on that. And then I love cooking as well. So always working on that.
Brian, pleasure chatting with you. And we're both close to New York. Well, you're in New York and I'm close to New York. We're gonna have to do an in person, whether it's at the upcoming Coinbase event or we'll meet up ahead of that or after that. But thank you so much, man. Thank you for taking the time to do this.
Cool. Let's definitely do that next time. Great chatting. Thanks, Tony.